While everyone panics during market crashes, pro investors quietly make a fortune. I've helped millions improve their finances, and I'll share the exact techniques for turning a crash into your biggest money-making moment yet. You might be thinking, my portfolio's down, but it'll bounce back, right? I used to believe that too, until I actually crunched the numbers. Here's the scary truth. When markets crash, your portfolio changes behind your back without you doing anything. It's like watching an action movie that switched to a documentary halfway through. Imagine you had a classic 60-40 portfolio, 60% stocks and 40% bonds. After the crash, it might drift to 45% stocks and 55% bonds without you lifting a finger. Now, your portfolio is way too safe, just when you need it to be aggressive to catch the rebound. I know people who made this mistake back in 2008. They didn't rebalance and they missed out on thousands when the market recovered in 2009. Money they'll never get back. Even studies prove it. Portfolios that rebalance regularly grow way more over time than ones that don't. Even a 1% difference in returns can mean tens of thousands of dollars by retirement. Bottom line, doing nothing is not a neutral choice. It's choosing to let your portfolio drift into a risk zone you never planned for. Most financial advice says just rebalance once a year. But if you wait for a calendar reminder, you're probably missing the best chances to buy low. Take the 2025 market turmoil because of tariffs. The market tanked in March and recovered by May. If you waited until your January reminder, you'd miss it. Here's the smarter way: threshold rebalancing. Instead of rebalancing based on dates, rebalance when your portfolio drifts by about 20% from your plan. For example, if you want 30% of your money in US stocks, rebalance if it goes below 24% or above 36%. It's like a car lane alert. You don't correct every second, only when you're veering too far off the course. Pro tip: during volatile times, check your portfolio every 2 weeks or so. You probably won't need to do anything most of the time, but when it matters, you'll catch it. Over time, this simple move can boost your returns by about 0.5% a year. That doesn't sound like much, but over 30 years, it could mean an extra $30,000 on a $10,000 investment. Now, before you go rebalancing like crazy, there's a catch. If you rebalance in the wrong account, you could trigger a giant tax bill. Follow this order. First, rebalance inside your 401k and IRA. No tax problems there. Second, direct new contributions wisely. Put your new money into what's dropped instead of selling anything. Only as a last resort, sell in taxable accounts like a traditional brokerage account, and use tax loss harvesting if you can. And remember, if you're retired, don't pull money from your losing investments. That sick feeling you get watching your portfolio drop, that's your emotional brain taking over. Market crashes trigger our brain's fight or flight response. It makes us want to sell and escape the pain of watching red numbers. Research shows that the more often you check your portfolio during a crash, the worse your decisions get. Here's what you should do. Write down your rebalancing plan before anything scary happens. Your plan should say something like, if my stock allocation drops by 5%, I'll sell bonds and buy more stocks. Make it simple, make it clear, because when the alarms are blaring, you won't have to think, you'll just follow the plan. At my age, I only invest in stocks for maximum returns, so when things got crazy in 2025, I didn't panic. I just continued following my plan, which is investing consistently through dollar cost averaging. Remember, the biggest threat to your money isn't the market, it's your emotions. Here's the truth. Crashes aren't the end, they're a new beginning, if you act smart. Remember these 3 things. Rebalance when your portfolio drifts, not based on the calendar. Keep more money by being smart with taxes, and plan for your emotions before they show up. But fixing your broken portfolio is only the beginning. You also need to know the right strategies to maximize your returns. Watch this video to learn 80% of investing in under 8 minutes.